Natural gas prices ended the week with a gain of plus 1.5%, closing at $2.24. Although prices slipped on Friday as traders locked in profits after a four-day rally, the overall sentiment stayed bullish. Hurricane Francine's disruption of Gulf of Mexico production and unexpectedly tighter storage data helped support prices. This marks the second straight week of gains for natural gas. Hurricane Francine made landfall in Louisiana, disrupting nat gas production and LNG exports in the Gulf of Mexico. Power outages and cooler temperatures in the southern U.S. slightly reduced demand, but the market remained focused on supply-side concerns. The production cuts maintained upward pressure on prices for most of the week. Nearly 30% of U.S. Gulf of Mexico crude oil production and 41% of its natural gas production remained offline on Saturday following Hurricane Francine, the U.S. offshore energy regulator said. A survey of energy producers showed more than 522,000 barrels of oil production and 755 million cubic feet of natural gas remained offline on Saturday. Cumulative offshore production losses this week due to Francine total 1.82 million barrels of crude oil and 4.12 billion cubic feet of natural gas. Meanwhile, the major U.S. oil producer said it was continuing to return workers and restore oil and gas production at its platforms that were shut in ahead of Hurricane Francine. The U.S. Energy Information Administration reported a storage increase of 40 billion cubic feet for the week ending September 6, falling short of market expectations of 49 billion. This brings total storage to 3,387 billion cubic feet, which is 198 above last year's levels and 296 higher than the five-year average. Despite the elevated storage, the smaller-than-expected injection points to a tighter supply. With production slipping below 100 billion cubic feet per day, traders view the shrinking surplus as a crucial factor supporting prices. Meanwhile, nat gas rig count in the U.S. increased to 97 on September 13 from 94 in the previous week, marking the highest reading since mid-August. Total rigs increased to 590 on September 13 from 582 in the previous week, marking the highest reading since mid-June. From a weekly technical perspective, the main trend is down. A trade through the main top at $2.35 will turn the weekly trend up, with a long-term target of $2.50. The market closed above the weekly pivot at $2.20, making it support heading into the new week. Holding above this pivot will signal buying strength, keeping support firm. A failure to hold above this level could trigger renewed selling pressure, with further support at the main bottom of $2. Please like, subscribe, and comment to support the channel. See you in the next one.